precious metals here. In the quarter, there was a strong recovery in the automotive industry, despite the fact, again, that we saw this impact of semiconductors and the shortage of semiconductors that had a downward revision. And in addition, we had also a very strong response, and we saw palladium reach $2,758 in this past quarter in response to the supply, the mine supply curtailment that comes from Russia. Please, if we turn our attention then to the full year and what we are going to see looking ahead for 2021, and looking at platinum mine supply first, 2021 we expect to see South African mine supply return to normal production levels. So 80% of platinum supply, mine supply, comes from South Africa, and it was heavily impacted due to two aspects in 2020. There were operational challenges and, of course, the pandemic.
ETF purchases were accompanied by strong demand for coins and bars. In addition, there were strong deliveries to exchange warehouses on NYMEX. These three factors contributed to investment demand for platinum in 2020, surpassing the previous year's record level yet again. This is the main reason for the record market deficit of almost 1 million ounces last year. Platinum's strong price increase since spring 2020 was largely attributable to this development. From the low in March 2020, platinum has more than doubled, reaching a 6.5-year high in February at $1,340 per troy ounce. The situation is completely different for palladium, though. Investment demand has been negative for years due to continued ETF outflows. Palladium ETF holdings were still at more than 3 million ounces in 2015. Meanwhile, about 500,000 ounces are just left. However, these outflows did not have any negative impact on the price development. The palladium price traded at around $600 as ETF holdings began to decline. Palladium holdings apparently served to bridge the supply shortage caused by the market deficits. ETF investors sold into rising prices, providing much needed supply to the market. Palladium ETF holdings thus behave like inventories of industrial commodities.
January 1st, 2021, it is fully applicable across the EU, and this regulation lays down the supply chain due diligence obligations for the EU importers that are actually working with minerals and metals of tin, tantalum, tungsten, or gold, the so-called free TG. I think it's worth noting that small volume importers are exempt from the due diligence requirements, as well as those that are processing recycled metals. It also applies only to EU importers that import above the annual threshold that is set in the EU regulation. And to be more precise, it's 4 million kilograms for gold ores and concentrates, and it's 100 kilograms for gold. Another point to notice is that those obligations are not applicable to downstream users of free TG. And of course, as you may guess, this regulation requires EU companies in the supply chain to import those free TG minerals and metals from responsible and conflict-free sources only.
Let me start with Zenaida, because in your presentation, unless I missed it, you explicitly included gold, I think, at the 3 TGs. But is silver and platinum, palladium included already or are about to be included?
So the current EU conflict minerals regulation is covering only gold, tin, tungsten, and tantalum, free TG, so it's gold. Silver is not included. So.
And any plans to include silver and the PGMs, because to me they seem a lot more industrial than, say, gold, and therefore have more applications and therefore should come under the scope of this regulation?
As far as I know, I don't think there are any intentions to include silver or PGMs. but I know that there are some speculations that it might be cobalt. So as the next one, as a potential one, but here I'm just sharing rumors, but I know. So let's see closer to 2023 what they will include.
Look closely at correlation recently, but I would assume there's also strong correlation to industrial metals like copper, given the almost exclusive industrial use of palladium. And most recently, we also saw quite close correlation in price movements that palladium rather moved along with base metals than with gold most recently, which is also an indication that there's a strong influence from the base metal side on the palladium price.
I think 100% I agree with Carsten in terms of the fact that the correlation would certainly be closer to base metals, but I do think that the palladium is not an investment metal. So you typically would see platinum being more of an investment metal. If we just look at the mix of demand for platinum, it has some industrial application, but it also has jewelry, which is a lot more price elastic, and it is an investment metal more than palladium, and the demand associated with palladium has just been so great that it's been behaving very much like an industrial metal, more so than platinum specifically over this period of time. Look at platinum specifically, certainly I think that over the next couple of years, and Carsten has kind of alluded to that, you know, we are seeing the heating up of the hydrogen economy and platinum playing a role there. With the price differential between palladium and platinum, we do believe that there is sufficient justification for some substitution, and we believe that that will happen. The internal combustion engine is going to be around for a while still. And so, you know, even though we are seeing strong electrification, and that electrification is happening at different paces in different regions, but you know, we are still going to see the internal combustion engine dominate over this period in time, and the gasoline engines are the dominant powertrain at this moment in time, especially in light duty vehicles. So whilst that differential between palladium and platinum is so high, you are going to see that, and that is going to shift platinum into you know, kind of longer term towards deficits, and so certainly I think that the comfort is taken from the fact that the investment can turn supply, which is good for an industrial user to know that. But at the same time, it's great for an investor to know that there is these prospects going forward.
I'm rather skeptical about palladium ATF demand in the near future. At least we have seen in the recent days after the news from Nornickel came out with this production losses, ETFs posted outflows, not inflows. So it's the same pattern that we saw in the last 5-6 years, when material was made available to the market whenever some kind of news regarding supply shortages came out. Things may change in the years when the importance of automotive demand declines. Maybe then investors look palladium differently and use it more for investment purposes. And this big chunk of demand loses importance, but I think that is unlikely to happen at least in the next couple of years or so.